Good evening, everyone. Welcome to the official YouTube channel of Office Study 24/7. So first of all, let me know how are you all. Also, let me know is audio, video both are okay. Are we good to go? So as you know, in the Achiever series, we are discussing one particular unit every day. So today again, I am here with all of you to discuss one more unit of your module C of IFS. Now, those candidates who have joined this session for the first time, or who have watching this session for the first time, or came to the Office Study 24/7 channel of Adda 24/7 YouTube channel for the first time, I would like to inform you all that this channel is having everything answer of all your queries regarding your JAIIB, CIIB bank promotion exam. Apart from that, these are the sessions, the Achiever series are the sessions that have been specifically designed for your JAIIB May 2024 preparation. So these sessions are going on Monday to Saturday only on Office Study 24/7 YouTube channel. Apart from that, if you want to see the earlier sessions, it means it is started from 4th of December actually. If you want to see the module A, module B classes, then you can go to the playlist section, and there you will find all the sessions recording for all the 4 subject of your, okay? And if you want to join from now onwards regular live classes, then PPB classes are going on in the morning at 6 AM and IEIFS going on in the evening 7 PM, Monday to Saturday. Okay, so this was the information I was like to inform you. Apart from that, one more important information for all of you: JAIIB readiness test is going to be conducted by Office Study 24/7. It is going to be live from 19th of January 6 PM till 21st of January. So what is this? This is simply a test that you have to give when you are preparing for your JAIIB. So this is a PPB All India mock test in which you can check paper. You can give paper before paper, like a kind of, before starting your preparation, a kind of mock test will be available for all of you that you can attempt and check your strengths and weaknesses and decide at what level your preparation is going on. Accordingly, you can move further, you can move forward with your preparation. Okay, so that's all. Let's start today's session, and this is your module C, class number 6. We have already done 5 classes, and I will be your mentor for IEIFS as well as the PPB for JAIIB preparation. So let's start the first topic, that today's topic, that is non-banking financial company module C, class number 25. So every day we are discussing one unit. In the last session we have discussed microfinance institution. Today we are going to talk about the NBFC. So what actually the NBFC is? Let's first understand about the topic, and then we will move forward to the questions. First, if I am talking about financial institution, what are financial institutions? Financial institutions are those institutions which actually help to exchange the fund among the persons who have surplus money and the persons who have deficit of money. So when you do this exchange of fund, that is known as your financial institution, or we can say banking institution or any other institution. So financial institutions help you to exchange this fund among the persons who have surplus money and the persons who have deficit of money. Now, financial institutions are divided into 2 parts. That is, one, banking institution. Second is non-banking financial institution. When you talk about banking institution, this is the institution which is regulated by RBI, and all the banks will become under this section. Okay, like your scheduled bank, non-scheduled bank, commercial, non-commercial, cooperative bank, RRB, payment bank, a small finance bank, public sector bank, private sector bank, your nationalized bank, foreign bank, everything. Apart from that, local area bank as well. All these are the part of banking institution which comes under the RBI's regulation. Now, the second part of financial institutions are non-banking financial institution. When it comes to the non-banking financial institution, what are these? Non-banking financial institutions are those institutions which cover your all India financial institution, the NBFC, and primary dealer. So they are not bank, they are non-banking financial institution like the NBFC. NBFCs are not a bank, but they provide services like a bank. That's why their type of banking is known as shadow banking. Okay, what is shadow banking? Shadow banking is simply the services of banking provided by NBFC. So NBFC is not a bank. It is not registered under the Banking Regulation Act. NBFCs will be established by registering under the Companies Act 2013. Now, earlier it used to be Companies Act 1956. Now they have to be registered under Companies Act 2013. And when I talk about NBFC, they are not bank, but they provide services like a bank. That's why whatever services they are giving, that is known as shadow banking. Okay. Apart from NBFC, we have primary dealers and all India financial institution under the non-banking financial institution. So today we are going to talk about NBFC only. NBFCs are those companies which provide loan and advances for the acquisition of shares, bond, debentures, derivatives, etc. They also provide loan for the hire purchase, your leasing, your factoring, etc. But these are the companies which do not involve themselves in these kinds of activities or in these kind of institution whose principal business is agriculture or the mortgage businesses or the sale or purchase of any goods and services. In these kind of businesses, NBFC do not provide loan, otherwise it provide loan to the public. NBFC also accepts the deposit, but not the demand deposit, term deposit. NBFC accepts the term deposit. Now when it comes to the term deposit, it means for a particular period of time maturity will be decided, and that's what the term money is. Term deposit is. So NBFCs can accept term deposit for the minimum of 1 year, that is 12 months, and maximum of 5 years, that is 60 months. This is the minimum maximum duration for which NBFCs can accept the term deposit. Apart from that, there are, if you talk about the classification of NBFCs, we have 3 types of classification. The first one is on the basis of liability. The second one is on the basis of activities, and the third one is on the basis of size. And broadly, you can say we have NBFCs D and NBFCs ND. Now, what are these? Deposit taking NBFCs and non-deposit taking NBFCs. Clear? So this is the basic understanding of the chapter. I guess this is clear to all of you. Now let's move forward to the questions and we'll discuss more about this NBFCs. Okay, so let's move to the first question. It is talking about which of the following can be considered as part of your own funds for an NBFCs. So let's see what is owned funds and net owned funds. We have owned funds, also we have net owned funds. What are these? Owned funds and net owned funds are those funds which will be taken as a let's say base to measure any parameter of the NBFCs. Let's say, for example, if you want to open a bank, so how much capital you required is the minimum capital requirement will be told by RBI, like 500 crore, 200 crore, 100 crore, etc. Now, if you want to maintain a reserve, you have to maintain reserve percentage of NDTF. If you have to go loan in the, you have to give loan in the priority sector lending, then you have to give the loan as a percentage of ANBC or your CEOB, whichever is higher. If you have to maintain the Basel norms reserve, that is capital adequacy ratio, that have to be calculated on the risk weighted asset. Similarly, when we talk about the different parameters of NBFC, if you want to calculate those parameters, for that you have to calculate the value on the owned funds and net owned funds of the NBFC. Okay, so which of the following can be considered as the part of owned funds? Equity share, compulsory convertible preference share, balance in share, premium account, all of the above. So out of these, which will be covered under your own funds of NBFC? And the right answer is all of the above. Right answer we have is all of the above. All of the above will be covered here in case of your own funds. Okay, so right answer will be D. I have forgot to write down the answer, but the right answer is D, all of the above. Next. What is the maximum period for which NBFC D can accept deposit? Now, what is NBFC D? I have told you, deposit taking NBFCs. So the deposit taking NBFCs are also known as NBFC D. Okay, and for maximum period, they can accept term deposit, and the maximum period is 60 months. That means you can say 5 years. Okay, and the minimum will be 1 year. Minimum will be 1 year. Maximum is your 60 months, that is 5 years. So right answer will be your C. Okay, next. A loan company is an NBFC as per which type of classification? So I have told you classification of NBFCs has been done on the 3 parameters: liability based, activity based, and size based. When it comes to the loan company, it's not a size based, it's not a liability based, because liability based companies are those in which NBFC have to return something, है ना? But in loan based company there is no liability, so the right answer is activity based. So loan company is the activity based category of your NBFC. So right answer is B. Okay, next. Which of the following is the regulator for housing finance company? So housing finance companies are those companies who are helping us to develop our housing sector of the economy. And when it comes to the housing finance company, they are regulated by the Apex Bank of Housing Sector. That used to be the RBI subsidiary. But in 2019, RBI sold 100% share of that bank to Government of India in 1450 crores amount. Okay, and it is not anymore the subsidiary of RBI. So right answer is NHB, National Housing Bank. Okay, right answer will be NHB, that is National Housing Bank. That's your right answer. Now next question after D, next question will be your, so housing finance companies are regulated by NHB. Now the chapter 3B was added in RBI Act just to make sure that the NBFCs regulation will go to the RBI. So now RBI regulates NBFCs because under the RBI Act it have been said, and the right answer of the year is 1997. In 1997 the chapter 3B have been added in the RBI Act 1934. So right answer will be your C. Okay, next question. Next we have here, globally, the shadow banking entities could be covered under which of the following broad heads? So I have told you shadow banking is a type of banking which is provided by NBFCs. Those type of banking which is provided by NBFCs, that is known as shadow banking. And do remember, only merchant banking is the type of banking which is regulated by SEBI. Okay, merchant banking is the only type of banking that is regulated by SEBI. Apart from merchant banking, all the types of banking regulated by RBI. Okay, so what is the answer here? First is saying money market funds, second is saying credit investment funds, hedge funds. Third saying securities broker dependent on wholesale funding. Fourth is saying securitization vehicle. Out of these four categories, which of the following will be covered under the shadow banking in the global business? I can see A, B, C or D. Only 1 and 3, only 2, only 4, all of the above. So the right answer will be okay, right answer is all of the above. So all are the functions that can be performed by the shadow banking, or that's covered under the globally shadow banking entities. So right answer will be your D, all of the above. Okay. Next question we have here, filling the blanks. Filling the blanks have been given on IFC, Infrastructure Finance Company. Okay, so an IFC is a non-banking finance company. The full form of IFC is Infrastructure Finance Company, which deploy at least % of its total asset in infrastructure loan, has a minimum net owned fund of rupees crores and has a minimum credit rating of or equivalent and a capital to risk weighted asset ratio of . So four blanks have been given to you, which you have to fill up here. So let's see, first of all, let's see the elimination. If I talk about out of these four, if I talk about myself, out of these four filling the blanks, I am very much confirmed that the NBFCs have to maintain CRAR, that is 15%. It is how much? It is 15%. One second. Let me write it correctly. It is 15%. Okay. So it means the fourth blank will be 15. So it cannot be A, it cannot be B, it can be either C or the D. Okay. Now, apart from that, I also remember if any company want to be under the NBFC category here, they have to have a minimum credit rating of A or equivalent to that. Clear? So the right A will be correct here. Now, if they want to open, like if IFC have to be opened by any company, they have to have a net owned fund of 300 crores. How much amount? 300 crore. It means 300. Now, how much they have to deploy fund out of their total assets to the infrastructure? 75%. It means right answer is C. Okay, right answer we have is C. So the or we can say an infrastructure finance company is a non-banking financial companies. They have to deploy at least 75% of their assets in the infrastructure loans. Second, minimum net owned fund of these companies should be 300 crores and has to have a minimum credit rating of A or equivalent. Apart from that, the CRAR they have to maintain is 15%. So right answer will be your C. Do remember all the percentage and all the data here. Very important. Okay. Now, next question is talking about core investment companies, non-deposit taking, systematically important. है ना? CIC is core investment companies. Now, ND means non-deposit, SI means systematically important. Is an NBFC carrying on the business of acquisition of shares and securities with the asset size of dash crores or above. 200 crore, 500 crore, 300 crore or 100 crore. So core investment companies, non-deposit taking, systematically important companies, they carry out the business of acquisition of the shares as well as the securities. Okay, but they have to have an asset size of what amount? Of 100 crore and above. So the right answer will be your D. Right answer will be your what? D. Clear? Next question. Which of the following is are correct about the definition of microfinance loan? So first of all, if I talk about microfinance, what else will be covered under the microfinance? So one second. Microfinance actually covers your micro savings. Okay, it covers your micro insurance. It covers your micro pension. Okay, it covers your microcredit. All these are the part of your microfinance. So when you talk about microcredit, it means microfinance loan you are providing to the people. Then what is the definition of microfinance loan? First is saying that a collateral-free loan it is that is given to a household having annual household income up to 3 lakh. Second is saying household shall mean an individual family unit which covers husband, wife and their unmarried children. Okay. Third is saying the loan shall not be linked with a lien on the deposit account of the borrower and all of the above. So when it comes to the definition of microfinance loan, all are correct. Okay, microfinance loan will be given to those household who have annual income up to 3 lakh, and household means the husband and wife and their unmarried children is the one family or one household that has been talking about here. And as you see, it is a collateral free loan, so you cannot take a lien on the deposit account of a borrower. So it means all the statements are correct about the definition of a microfinance loan. Do remember that. All definitions are correct about microfinance loan. Next question. Okay, next question. Next question we have here. Regulatory structure of NBFC shall comprise of 4 layers based on their size, activity and perceived riskiness. Which of the followings are not included in 4 layers? So in the NBFC, the 4 layers have been given, like this is the layers that will be seen. Out of these, which of the following is not one of the layer? First is saying base layer, middle layer, upper layer, top layer, all are included. And the right answer is all are included. Actually, these are the sequence. Base layer is the minimum layer, then middle, then upper, then top layer. Okay, so these are the 4 layers that have been given under the regulatory structure for the NBFCs. Okay, so do remember base, middle, upper and top layer. Okay, done. So this was all about your NBFC chapter. So before moving forward, let me know how many answers you guys have given correct. Also, let me know if you have any doubt in any particular topic or the question we have discussed here. You can drop a message in the comment section. I will check your comment and answer there. Okay. Apart from that, I have started this resolution batch. In this batch, I have started PPB from 16th of January, and from 6th of February, I will be starting the IE IFS subject. So this is the latest batch for all of you. If you are looking for for the enrollment of a paid classes in which you do not have to do the R&D. Everything will be done by the mentors. You just have to come and learn and remember that. Okay, so this is the resolution batch available on the application. It started recently. This is the latest batch. How to enroll? To enroll, first of all, this is the bilingual batch. If you know someone who is preparing for bilingual batch, then let them know the latest batch for bilingual is Shapath. So first, download the Adda 24/7 application. After downloading the application, you have to go to the home page of the application and scroll down. You have to find the exam category, that is your JAIIB CIB. After finding the exam category, go to the JAIIB May 2024, click on view all option, and you will find all the batches. The Mahapacks is there, Shapath batch is there for bilingual candidates, resolution batch is there. If you want individual subject batch, that is also available. Okay, how to enroll? Just click on the product. Do check the offerings. So scroll down, you will find the study plan as well here. So when you scroll down, this is the study plan available. AFM already started by Niharika ma'am. PPP already started by me. So the 2 subjects study plan already updated. PPP started from 13th. On 13th, we only had the orientation class. The first demo we had on banker-customer relationship on 16th. It means yesterday only. Then Niharika ma'am started the AFM from 10th of January. So this is the batch. After checking the information, click on the buy now option. Here you will find 77% discount only. If you want more than that discount, then use a code that will be Y496. Click on apply. Once you apply, you will find 77% discount is there, but 1% additional discount will be available if you use or if you purchase the batch from the Adda 24/7 application. Okay, so 1% additional discount will be there. So 78% discount is there. 6 months validity. Coupon code is Y496. Latest started batch it is from your 10th of January, AFM started. From 16th of January, PPP started. From 6th of February, I will be starting IFS. Okay. And if you want to enroll in any other batch, the same process have to be followed. Apart from that, if you want to regularly join the YouTube session, the Achiever series of PPB, IFS, Retail Banking or AFM, then do subscribe to the channel and press the bell icon so that all the upcoming sessions notification will be given to you properly. Okay. And this is the whole information for today. And let me know if you have any doubt in the comment section. So thank you for joining the session and have a great day, everyone. Take care.